All right, trade pros, welcome to our morning market update for this beautiful Wednesday, April the 8th of 2020. It's George Babsoff, Trade Pro Academy. It is the second last day. Happy birthday, Ad Blomstein. Tomorrow's your birthday. That's awesome. Today is the second last day of the week in the markets, right? It's middle of the week by a calendar schedule, but tomorrow is the last trading day. Friday markets are closed for Good Friday. All right, I cut my hair again yesterday. Look at this, I did it myself. Remember, I slept on it, and so it might be a little bit screwed up this morning, but considering I did this by myself with a pair of regular scissors, like those Henkel ones that you use for cooking. Not bad. I cut your hair too, if you want. All right, let's talk about the market today. Coronavirus cases top 400,000. All right, in the United States alone. A big rally yesterday saw the Dow climb more than 900 points, and then we sold off quite hard. We lost the entire progress of that session from the morning going right into the close. Massive sell imbalance into the close, massive sell order into the close, and that pretty much wiped out a historic. So that was the biggest reversal in one day since 2008 of October, which is interesting, right? Because in October of 2008, markets were still dropping and it was not the low. So it's interesting to see such a big rally get erased so swiftly with one session. And we were expecting bullish price action this week, and we still do, but we've gotten it for the most part, right? We're up over 200 points. And so it's under 200, but not by a lot. And so the thing we're looking at now, I mean, all this rally started on Sunday when there was news that these cases are decreasing, all right? The curve is dropping off globally. Primarily in hot spots of coronavirus outbreaks like Italy. We saw less numbers, less infections, less cases. Well, on Tuesday, which was yesterday, New York reported its largest single day COVID-19 deaths at 713 fatalities. New York alone, all right? In the U.S., the numbers have surpassed 400,000. It's doubled its confirmed cases in just 1 week in the United States. That's huge growth. It's still doubling. All right. And here's the most disturbing part. There's research of patients who have recovered from COVID-19. And what researchers have found on early on, I mean, it's not a very massive study, so I wouldn't panic, but what they found on is the people who have beat coronavirus don't actually have the antibodies in them developed, meaning that they could get it again just as easy as somebody who hasn't gotten it. So this whole like herd immunity isn't a strategy that's going to get us out of this. And so, you're wondering, how do we get out of the coronavirus situation? Wow, there's a pretty big rally going on at the moment. There's going to have to be a vaccine of some sort. So I was looking at some charts of how it has happened in the past with other viruses. And until the vaccine comes out, it's just a cycle of, here's an outbreak. Oh my God, everyone isolate. All right, isolation's causing too much economic damage. Let's not isolate. Let's go back out, but just be careful. Wash your hands, whatever. Boom, outbreak. All right, everyone, let's isolate. Isolation causes economic damage. Let's go back out, and it just repeats, flattening the curve, obviously, and pushing out the damage for long enough as we can find the vaccine. That's what's kind of spooking the market. All right, that kind of information coming out isn't really going to be helpful, and we don't really know what the economic damage is. All right, that's why everyone's following coronavirus cases. Stock traders are talking about coronavirus, me included. Like, I'm not a virologist. I think the role is. I don't know how this stuff actually works on a medical field. Nobody does, except people that are doctors who's dedicated their life and career to this. But what we do know is all we have at the moment is the cases. The cases are going to be correlated to the damage in the economy. All we're looking for as traders is correlation. We need something to correlate to, snap to, and use for our investment decisions and trading. And at this moment, for correlation purposes, I can tell you this, it ain't looking good. The White House and Larry Kudlow, economic advisor to Donald Trump and the Trump administration, say they're working on a plan to reopen the U.S. They said that the effort would start in small cities that are not heavily hit by coronavirus, and the idea would be to open businesses there slowly, all right, and gradually in places where there aren't as many cases, which is a quick way to guarantee that the places where there aren't many cases will get a lot of cases. Right? If you just think through that a little bit, you'll start to realize that people who are close to those cities, who are probably far out, will just drive there, to get groceries because it's more safe, and will leave their germs on doorknobs and handles and everything across those cities. Now those cities will have it too. So I don't know. Look, I'm not criticizing the plan. I think it's interesting. We do need to reopen the economy at some point, and the plan is to start in smaller cities and leave big ones like New York shut. Trump said the economy will open up much sooner than later. Here's the question I want to ask you guys in the comments. Tomorrow morning, there's an announcement. You no longer have to socially distance. You could make out with strangers if you want. Just get out there and do whatever you have to do as long as you're spending your money. Would you resume the pace of consumption you had before? Be honest here. Meaning, would you kind of act like nothing happened? And if that's the case, then the only thing stopping you is social distancing. Right? You're not wanting to spend less. You don't think it's the right thing to save some more money and clamp her down. You're just being held back by the government. Right? That's sort of what the move would be. Right? So would you go out there and just spend like it was February, early February? See, a lot of people are saying no chance, right? Even if the economy reopens, I don't think the dollars flow out as easily. People have lost jobs, so it's going to take a while to get those people who lost jobs back on board. All right? People are going to have to... Confidence is ruined very quickly and rebuilt very slowly. Kind of like trust. Webcoin, you could still be kissing strangers. He's like, yes, I would be kissing strangers just as quickly. If you're doing it before, you're probably missing it now because you're at home alone, right? And you only can kiss loved ones, and then what's the fun in that, right? To kiss strangers, you got to get back out there kissing strangers. But so that's what I'm talking about. The economic damage or impact hasn't even been measured yet. Next week we have big companies releasing earnings. This is going to be interesting to see. All right, that's the information all traders are waiting for. Until then, we have coronavirus to go by. This morning I found a really interesting squawk. McDonald's, pretty big company, said that they're suspending their share buybacks. And I think you're going to hear more of this from companies in the next quarter and a half or two, where they're not going to use cash on their book to buy back their own stock. Buybacks have been the single biggest contributor to the rally since about 2011. Right? They're raising $6.5 billion of debt to strengthen their cash position. And they're saying they're withdrawing their 2020 outlook, does not expect March sales to be indicative of the near term. Basically, they're saying, holy crap, we need cash. We're not spending money to buy back our own stock. And I have no clue what's going to happen. Withdrawing your guidance says we're going to have terrible sales. Prepare yourself for it. All right? It's so bad, I can't even guide the expectation. I don't know how much we're going to get hit, but it's bad enough for me to use all my cash to raise more debt so I could have cash on my book because I'm anticipating a little bit of a blowback from this. I'm anticipating slowing sales. They know how much it's slowing. They have the reporting, but they're not going to go out and say it. So because the stock's going to get crushed, interestingly enough, the stock traded just 1.3% lower, and it's 5.3% of the weight of the Dow Jones. McDonald's is a big company. All right. I'm just looking at some of these squawks that came in because they could be important, but let's keep going. All right. Europe. So there's a little bit of downside sentiment. Eurogroup overnight failed to agree on a coronavirus stimulus, mainly between a feud of Italy and Netherlands. Their finance ministers duked it out on how this was going to be paid for. All right. And that weighed the sentiment in Europe. I find it interesting that Europe's actually talking about how they're going to pay for this. It sounds pretty reasonable. Wait. It's like somebody comes in the room, everyone's like, all right, let's print money. And everyone's like, yeah, there's a big party. And somebody poops to the party and opens the door and says, hey, you guys talked about how you're going to pay for this? And then that's how that meeting ended. European markets are down overnight. So in Asia, Japan was up 2.1, Hong Kong's down 1.2, China down 0.2%, India down 0.6. In Europe, markets are down across the board because it's Eurogroup failure to come up with the coronavirus stimulus package. London was down 1.2, Paris is down 1.6, Frankfurt's down 0.9%. Futures in the US are flat. They lost some of their gains and now have regained it for the most part, even bidding up above the prior day close. A significant amount, actually. So we're at 26.38. Now we're trading at the 80, so about 40 points higher. Yesterday we talked about the surrendering of equities. I was reading this comment. Yeah, exactly, Lee. It is harder in Europe because every country it's not like a state. Countries in Europe are not like states in the US where they're united by a common language, a common culture. You know, you can hear the accent difference between a New Yorker and somebody in a southern state, obviously. But, you know, they might have slightly different values, but they're very similar in a way that it's a common country. They could agree on the United States. Countries in Europe don't care about Europe. You know, every country is a separate, more isolated fraction of the union. So it's more difficult there. You know, a lot of people thought the euro wouldn't last this long. All right. Crude oil's up 3.6 this morning, but it's lost a lot yesterday. We're back to 24.50. We gave up probably about $6 or $7 of price action. Not 6 or 7, 4 or 5. You know, on this meeting, I'll let Steven talk about that. Today's crude oil inventory day. We're going to see a 10:30 latest update of inventories in the crude oil and energy complex. It's going to cause a lot of volatility in the market. Bitcoin's down 2%. Mortgage applications this morning, the refinance index is down. Applications are down 18% week over week. The refinance down significantly, and the 30-year mortgage rate was at 3.49% versus 3.47. So the 30-year rate is up a little bit. 10:30 we got EIA, or the Department of Energy's report, and 1 p.m. results of a 17 billion 30-year note auction. 2 p.m. we have FOMC meeting minutes today. We're going to wrap it up with this. The Federal Open Market Committee cut rates and added a lot of stimulus into the economy. What they say and how they justify it may have a short-term impact in the market today based on the FOMC meeting minutes to 2 p.m., but I think they're the least important today than they've been in a long time, because we already know what they're going to do. They panicked, all right? And they panicked based on the fact that coronavirus and the economy. There might be something interesting that comes out of that. I don't think the market watches these FOMC meeting minutes like it used to. It's gotten out of the Fed what it already needed. On to the next one. The market is a heartless, crude person. You know, if you're trying to build a relationship with a person like that, prepare to get hurt. If you're going to use the person that's trying to use you, it might work out for both of you. Love you guys. Have a great rest of your day. And be safe. Manage your risk, trade pro. Take care. Boxy, over to you to talk about oil for the day. And then we're going to look at some levels on S&P. We're going to get some trades. You guys, I encourage you to join us. No, we trade daily in the morning. We set levels, we plan the trades, and more importantly, we interact with one another. We answer your questions live. Join us in our community. It's a great time. A lot of our members are seeing massive success with this market volatility. Be a part of a winning team. I love you guys. Have a great day. Ciao.